Welcome to today's Sulke Talks webinar on blockchain and distributed ledger technology in financial services. So yeah, I think we just get started, even though people might be dropping in a bit later. But nevertheless, let's start. Let me quickly introduce myself and also Sulke. For those that don't know Sulke yet, we're a 50-year-old technology innovation company founded in Switzerland. So we took the leap of faith to expand to Asia about 3 years ago, and we don't look back. We don't regret it. So we have now offices in Singapore and in Hong Kong, about 150 talents here. And yeah, we focus on developing services and products based on technologies, new technology. So from the initial vision through the development to deployment and the production and as well operation. So we have globally 14 offices and successfully delivered 1,000+ client projects. So we have quite a good global footprint. And as I said, we're really happy to be here in Asia as well. So to myself, I'm an engagement manager with Sulke here in Singapore. So my focus is on software engineering projects, especially in the financial service industry. So previously, I also worked at UBS in Switzerland and also here in Singapore. And before that, in a management consulting firm back in Switzerland. So, and I started about 5 years ago to explore certain aspects of distributed ledger technology and blockchain. I mean, it's not a new technology, but the use cases that are currently being formed it was always attracted me to this topic. So just at the time, I would say it was more of a hobby. So therefore, I'm even more grateful to be here today and to talk about this topic for Sulke, but also with our panelists who all drive this adoption in the ecosystem. And I really must say that companies are pioneers in this space and with this interesting technology. So yeah, I hope I would say we get quickly into an introduction, and then yeah, let's start. And I hope after the webinar we have some new interesting insights on the technology, but also can finally clear up some of these buzzwords which are flying around, and also the bias which is out there. So maybe just a quick note, there will be a voting included. You will see it later on your screen, especially on these buzzwords, which we then address later in the Q&A session. So let me now get into the introduction round. Maybe Roland, would you start for us introducing Signum and also yourself?
Thank you, Anja. Yes, I represent Sygnum. Sygnum is the world's first digital asset bank. We obtained our banking license about almost exactly a year ago in Switzerland. And Sygnum has been built to make digital assets bankable. That includes tokenized assets, but also what people refer to as cryptocurrencies. I joined Sygnum officially 2 years ago, a bit more than 2 years ago, but was basically there from the start, also as an investor. And my background prior to that was I was the CEO of Eurex Asia, which was or is the derivatives market of Deutsche Börse Group. I also used to run global corporations and also was a board member of the Bombay Stock Exchange in Mumbai. I'm in cryptos and blockchain since 2014. I started as a research fellow at SMU here in Singapore. And yeah, and I have been a part of that exciting journey since then. Thank you.
Nice. Maybe Kunal, can I ask you to go next?
Yeah, sure. Thank you, Anja. So hi, everyone. My name's Kunal, and I work for R3. Some of you might be familiar, some not, but we're a world-leading enterprise blockchain software company with locations across 14 different countries. My personal role, I'm one of the business development managers here in Asia Pacific and located here in Singapore. My background, I'm an old school traditional banker. Been in the banking industry for about 13 to 14 years. back in London, and I moved to Singapore to take up this new exciting and really kind of innovative role here at R3 just a few years back. So awesome to be here, and looking forward to the panel discussion.
Thank you very much. Then Kevin.
Hi everyone, I'm Kevin. I work for an investment firm in Temasek, in Singapore called Temasek itself. So I'm part of the blockchain team within Temasek. I wouldn't call ourselves experts, frankly, in this particular space. It is in a constantly evolving phase, highly exciting, very challenging, and difficult to grasp at times. It's a team of what I generally think are a bunch of foolish people who are still foolish enough to try. And as we explore the scenery itself, right, as we explore the ecosystem, it's kind of like my privilege to be here today to really try and tap on the wisdom of the crowds and to share what are some of the perspectives that we've encountered over the way. But frankly, don't take this as the gospel truth, because I think one key thing I wanted to just start this panel with is on the basis that everyone's learning. So we'd be glad to hear the views of the crowds as well later. Thank you, everyone.
Nice. Okay, thank you very much for this introduction. So I start with the first question, and just maybe to guide you through the webinar a bit. So we have a few questions prepared, but then also, as Kevin just mentioned, we really, like, as he said, we don't want to pray and just talk and not include you. So please then also do post questions, and we will also then later get to the voting, which we will also take up. So the first question also goes to Roland again. I mean, you have been following the market for several years. Can you share your perspective and also the evolvement of the market, what you've seen in the past years?
Yes, as I mentioned in the intro already, it has been quite an interesting journey. In my previous role at Eurex, where my clients were banks, prime brokers, broker-dealers, proprietary trading firms, and alongside the value chain of the entire institutional buy side, I had the chance to speak to all those financial institutions since 2014 to 2015, also about digital assets, blockchain, and back then mainly cryptocurrencies also. And I was a witness of this mental adoption some years ago, coming then also into a new reality where we see now today significant buy-side involvement and also investments growing in the space, even into cryptocurrencies. So back in 2014 to 2015, some banks started already working on POCs using blockchain protocols such as IBM Hyperledger, but also R3 was part of those kind of I would not say experiments, but POCs, which happened more or less in the basement of the larger banks and also financial market infrastructure institutions. Then during the crypto boom in 2017, you saw hedge funds, smaller hedge funds in particular, and also smaller family offices investing into cryptos. Some of them came a bit late to the party, and then the party abruptly ended in January 2018. So it didn't end so well for some of them, in particular for those who are setting up funds. But this is also when the banks reacted on that demand in 2017, in particular those in prime brokerage, when they saw demand coming from hedge funds. So this was when I started looking into it, but then the interest, of course, cooled down again in 2018 when the markets came down. But then in 2019, you saw the first banks also issuing securities as tokens. There were some debt projects such as Société Générale and also Banco de Santander. They launched bonds as tokens. And then, yeah, in 2019 also, the first digital banks, including Signum, were launched. And now we see also, in particular, now caused by the recent economic developments and the increase of quantitative easing, we see an increasing number of traditional asset managers now also orientating themselves towards what seems to be stable and not exposed to the inflationary effects of the world debt problems. So we see a lot of new requests and from the traditional buy side, again, hedge funds and also family offices, but also external asset managers now investing for their clients or for themselves into assets such as Bitcoin in particular?
Maybe that's a good question then. I mean, you mentioned hedge fund, asset manager. How is it with investment companies such as Temasek? Maybe Kevin, can you elaborate a bit on your insights on the market and what trends and what your team is assessing and working on?
Sure. So Temasek's a bit different. I think Temasek's playing a role whereby we are predominantly focused on the venture building space. And that's where we're really thinking about it as a technology, right? So I think there are different ways to look at it. One way that Roland has talked about it could be the excitement in terms of how this new class of asset classes could actually come onto the market. And if you look at it from a monetization standpoint, there could be value there. There could be something that's actually exponential in value. And it could be something whereby traditional family offices, traditional hedge funds will be saying, hey, what am I missing out in this particular space? Should I actually add a sliver of that to my portfolio? There's another angle, which is, I think, the view that Temasek takes a lot more strongly, which is about the long-term potential of this as a technology and what could be done working together with various like-minded companies, partners, folks in the ecosystem, right? The leverage of effectively just a replicated ledger to ease some of the pain points which are in the industry itself. And through that, create new ways of doing things or create ways of doing things whereby it's actually cheaper and faster compared to what we have today. So that's another angle which I said you could actually think about that. And finally, I guess it's also a question as to, for folks who are willing to, and this is very much bring it on the spectrum of the folks who are more willing to experiment and going earlier in the scene itself. If you have folks who are like venture capitalists, angel investors, who really want to dabble at the forefront of the technologies, you could indeed choose to bet on some of these companies that have very aspirational goals, who have set up decent number of teams there and have done significantly well in the past number of years in trying to grow either the technology layer or also to grow the adoption within the ecosystem itself. So these are some of the trends I think you could think about it if you're looking at it from an investment perspective.
Yeah, thank you very much. And Kunal, to you, I mean, maybe a bit more in the present, I would say, I mean, as a solution provider, maybe can you share a bit also, I mean, the current view, I mean, with Corona, COVID, like what's going on, like how was it the last half a year? How is it, like, what's the good, what are the challenges for the market?
Yeah, happy to. So, you know, I think from coming from a technology kind of perspective, and really being at the forefront of kind of driving innovation and enabling it, you know, we kind of believe that DLT is in fact at an advanced stage. You know, I think Gartner kind of did a study a few years ago, and I think they did some market research saying, you know, some crazy figures like almost $100 billion of value could be unlocked by using blockchain by 2025. But what are the actual fundamental like uses of blockchain and what does it actually achieve? And we've probably seen COVID-19, you know, I think that word this year is going to be very famous, 2020, kind of accelerating the adoption of technology. So for any kind of research or historians out there in the crowd, you know, any sort of crisis that kind of happens in our world today, whether it's the Great Depression or it's, you know, the World War or more recently the 2008 financial crisis, which I fondly remember. In the aftermath of it, there's always a kind of pivotal point where people start focusing on technology. And this year has been no different. You know, COVID-19 has accelerated that kind of journey. Obviously in a good way, and we're kind of finding a lot of use cases within kind of the banking sector, of course, and very relevant, I guess, to this session in the capital market space, but also in some of the other areas. And I don't want to kind of diverse too much around things like global trade or anything, but there's also kind of use cases and solutions being applied to those kind of industries. And what it's actually doing is kind of streamlining processes, kind of reducing complexity. So, you know, banks, as you know, have so many different systems. It's kind of reducing that and getting rid of that to kind of centralize things. And at the same time, also kind of facilitate data sharing, which has been a kind of key focal point for this year. So I think it's, you know, it's an interesting time for blockchain and DLT. And you know, I firmly kind of believe that it's kind of heading towards a banking ecosystem, especially in the capital market space. And I guess some of the challenges that we see, you know, having these kind of conversations with these clients are, you know, things like kind of organizational priorities and culture, competition with kind of traditional infrastructure and traditional architecture at banks, and change management. So, you know, I was speaking to someone in Japan the other day, and if you've worked with Japanese banks, they have a tremendous amount of manual processes. They're still using fax machines or checks or whatever it is, and you know the technology is ripe. You have to change that mindset first, and once you change that mindset, then you know you can get adoption of technology.
Yeah, thank you. I mean, ourselves, like we're realizing this as well as a technology provider, right? So we have like the first implementation, the first use cases which we were successfully able to finish in projects. But yeah, I mean, that's why also my next question, like to Kevin, like what do you, like you talked a lot about the, like just what your interest and how you're looking at the market, but what do you actually see getting built in the ecosystem, like from a tech perspective? Where do you see the most action, the most funding flowing in? Where is where is it happening?
So the scene has evolved, and to be frank, I think it will continue to be evolving. I just want to pick up a point that Kunal was saying, because he made reference to world history itself. The realization, and I've been studying this as a pet topic myself recently, right? The realization is this: the realization is that humans have an uncanny ability to be exceedingly bad predictors as to how things will continue to change, and this has been proven throughout history itself. So the reason I'm saying is because when this whole thing first started, actually it's not a revolutionizing technology itself. Replicated database, blockchain, distributed ledger has been around for a long time. But with the advent of Bitcoin, and more importantly, the potential or possibility of making huge money, it created a certain level of interest that was phenomenal and took the world in a certain craze and attention. You got a lot more developer community coming in, right? And then there was the inadvertent crash in the crypto bubble, and then the world shifted again along with it. Now, a lot of this was exceedingly hard to predict in the first place, but you observe it and you see how things have changed. So the few comments I would just want to make is the observation has been, especially if we look at tech, when this got the attention of a lot of folks globally, you actually had a lot of developers sitting in their various garages and all that, coming together, digitally coming together, right? And collaborating, coming up with different white papers, really spending a lot more time thinking about different ways of setting up what we term as a layer one technology, right? Coming up with different ledgers, competing ledgers. And there's been a lot of time, effort, money really thrown into that space. And then that has evolved. That's evolved because next, as they realize that, hey, there's a lot of ledgers which are being built, why is it that no one's using them? Or how do we actually ensure that there's enough people using them and interoperating amongst these various ledgers, right? To ensure that there's real meaning behind that. And then you have a few key ledgers that are then becoming the predominant standards, either in the public permissionless world, which is very much targeted to the wider public, or in the case of certain enterprise permission chain, which institutions or corporates are more comfortable with because of just how it's being structured. And the focus has then shifted towards focusing on use cases and building out applications for use cases. And that, I think, has been the trend generally for the last number of months, right? And the trend will continue to change. Some industry use case, you have a scene whereby there's getting good traction. Others, they're feeling that it's a little tad too slow. So efforts, again, are kind of like foundering. And I think that space itself is trying to figure out for itself. We can talk a bit more later into which are the specific use cases I think are exciting. But generally now, the focus is really on the application side of things. In the public permissionless world, the world have then also shifted towards what is predominantly known as decentralized financing. Again, leave the topic for another session. But but what is the common theme? And I'll just leave this topic before I end this part of my sharing. Is that what typically excites people and driving a lot more activity on the tech front usually is accompanied by interest. Interest either from the case, oh, there's a real way to make money, or oh, interest because there is a good amount of reciprocity for adoption, for people, users within the industry willing to come on board, right? And I think this fundamentally will be the kind of like direction that's going to be going ahead, and we will just have to see and observe where this is leading to in the number of years' time. Yeah.
Thank you. Yeah. I mean, Roland, question to you. Signum is a few steps ahead. You guys have already built a lot of the platform, a lot of the tech. Share a bit with us, like what have you built, and how does it help us to enable the future finance with digital assets?
Yeah, happy to do so. Before I come to that, let me also follow up on Kevin's points with regards to the use cases and the adoption. And also the motivation of institutions and people getting into it and seriously looking at the new technology and how it can be adopted also to make things better, to make more money, or to make things cheaper, or to, in particular, to generate efficiencies. And I think this is one of the most important aspects probably here. If you look at today's financial markets, and in particular when you look into the areas of settlement, there's a lot of inefficiencies still, and this is where to come up to present or to highlight one very high level and simple use case. When it comes to settlement, the DLT technology can really massively contribute to efficiencies. I'll give you one example. We were invited also to Project Ubin Phase 5. Where we contributed a use case for the cross-border settlement of a hypothetical digital security token, so representing a Swiss stock being bought by a Singapore investor, and then we highlighted the flows, the deliverables payment flows by using DLT technology, and also things like corporate actions like dividend payouts. And all this can be done in T0 if you use the technology. But if you compare a traditional dividend payout process, it starts with the identification of the eligible shareholders and ends at the payment process when the shareholder finally receives the cash on his bank account. This takes in an average kind of 5 business days for a traditional stock exchange. So just only one example for a use case and also the adoption. But of course, it's a way to go there, and it's also, as Kunal has pointed out, it includes the adoption of infrastructure. And in particular, a lot of financial institutions have that problems suffering under legacy systems, which is a very complex problem, of course. Yeah, so just to highlight also a few use cases, and then please let me come also to Signum, what we have done also to kind of solve those challenges around it. In particular, linking the traditional world of finance with the new world of DLT technology. So we have set up Signum as a bank regulated and supervised in Switzerland, and also with an asset manager regulated and supervised here in Singapore. The bank offers services, banking services, such as the bank accounts, such as the trading of digital assets that include cryptocurrencies, but also includes the tokenized assets. We have built the entire stack for settlement and custody, so the Signum is a custodian as well. We have started a product series around lending and borrowing, where people can pledge their cryptocurrencies as collateral for fiat loans. We have a tokenization arm, which deals with the tokenization of real assets. So what people also refer to as security tokens, or depending what regulation it would fall under, but the tokenization of real assets. And then we have an asset management arm here in Singapore, as mentioned, and also a division which offers our solutions to other banks as B2B white label solutions.
Thank you for sharing that. So Kunal, also for you, I mean, now also Roland has touched upon it, what all needs to be implemented with legacy, and like there's a huge field to be built. What would you suggest if you have a client that is looking into, like a business that is looking into exploring blockchain or just a DLT solution? Where should they even start? How do they get started?
Yeah, it's a good question. So, I think before I maybe tackle that, I think I just want to touch upon Roland's point on settlement. And I think we're kind of seeing a lot of use cases around, interbank reconciliation, which is trying to settlement or settle assets or securities quite fast. And there's a project currently going on in Italy. The project called Spunta, which in Italian actually means complex. And what it is it's basically trying to resolve the whole kind of interbank reconciliation process between almost 45 to 50 banks in Italy. And it's been something which has been in the works for about a few years, but it's gone into production now. And this is just a kind of an example I wanted to give you guys that, I think it was Kevin who mentioned earlier that, 2018 maybe was the year of kind of, 2017 rather was the year of POCs. 2018 was kind of the year of pilots, and then we've seen a lot of production use cases in the year of 2019 and even 2020 with this kind of pandemic. And people have been laying the foundation for a few years, and things are slowly moving into production. And we're also kind of seeing use cases around tokenizing highly kind of quality liquid assets. I know kind of Roland touched upon kind of the digital asset side that Signum are kind of doing at the moment, but banks are using blockchain technology to kind of tokenize a basket of securities for their kind of collateral process. And there was a project which was run by a company called HQLAX in Europe, and in conjunction with Deutsche Börse, they were able to kind of set this into production, and already onboarded the two of the biggest Swiss banks who are out there, UBS and Credit Suisse. So yeah, and again, that's been something in the pipeline for a few years as well, and it's kind of gone into production as of 2019. So these are kind of some of the areas that we're kind of seeing. But if any business was, I guess, trying to get involved in a DLT and blockchain, I think there are kind of 3 or 4 different key factors that I would kind of advise. Is firstly, you need a focus point. You need to try and figure out what you're actually trying to do. Blockchain is a team sport, and it does require the buy-ins of a lot of different participants in the network. So having a confirmed or a solid use case would be a great starting point for those who are looking into it. I think secondly, choice of technology. So what kind of DLT do you want to use? As Kevin mentioned, there's the public route that you can go, and then there's a private route, which is what R3's Corda is, for example. And both offer different benefits. Both have slight pros and cons as well. So I think the choice of ledger is quite important. And then the third thing I would say is the governance and kind of the structure. Kind of what do you want to put into place? How do you want to put it into place? How many participants do you want to be participating in the network? So I think there's kind of like a structured approach to those trying to break into DLT or who want to use kind of DLT or blockchain to innovate or to kind of automate their processes internally.
Thank you for this. Yeah. So I mean, we touched upon earlier on project Ubin. So that was every one of you, R3, Sygnum, and Temasek was involved at some point, or is still involved, obviously. So it was a collaborative project to figure out like how can we use blockchain and DLT for the clearing and settlement of these payments and securities, which we also touched upon earlier, right? So I mean, we generally see this is also a trend in the trend evolving, right? There's a lot. I mean, it also shows up in our buzzwords, right? Which we are having a vote on. So maybe can you also share a bit what is actually your involvement there? What were you actually doing there, and what were you trying to achieve? And I think Kunal, you also had some experience in other countries, not just in Singapore, projects that R3 was involved with, kind of like the same end goal. So maybe share a bit more on that with us.
Sure. So our involvement in Ubin was quite an early stage. So I would say around there was the different phases of Ubin, and I think Kevin is best placed to maybe go through exactly what Ubin entails. But phase 1 was to kind of tokenize and transact the Singapore dollar. But we were involved from phase 2, kind of facilitate the kind of decentralized netting in RTGS, kind of using different technologies, and kind of Corda was used for part of that. And Yes, we're still involved in some form or manner, but our main involvement was from an early stage in Ubin, and kind of thought leadership and being able to kind of publish a paper around the exploration of a CBDC. But I'd like to maybe just bring in some of the other projects that we've been kind of working on as well, and especially here in APAC, Project Inthenon, which is in Thailand. Thailand, or the Bank of Thailand, wanted to basically launch a proof of concept for domestic kind of wholesale fund transfer. And this was started in 2018. And then there was 3 different phases, phase 1, phase 2. And then the phase 3 was in fact a collaboration with HKMA, which is the Hong Kong Monetary Authority. And they've aptly named their project on their side, Project Lion Rock. So the next phase now from what Thailand are going to do is use their research that they collected for Inthenon for this next phase to kind of explore cross-border payments and cross-border settlements. So yeah, it's still at a kind of a research phase with some of these central banks. And then there's some banks across Europe who are doing things as well, like for example, Riksbank in Sweden, who we're involved with as well. They're trying to go the whole kind of cashless society route, and want to potentially use an e-krona to offer kind of people the benefits of a digital currency. So but I think before I kind of finish my piece, and hand it over, I think we have to understand why are these central banks using blockchain, and what's maybe why blockchain for this kind of use case. Blockchain enables kind of digital storage and transfer of value, for example. It kind of enables interoperability as well between different participants through smart contracts. And again, depending on the choice of ledger, whether it's a private or public, it gives you that peer-to-peer kind of network. So central banks are able to transact more securely and make things a bit, a lot more efficient. You can achieve that through kind of through blockchain.
Maybe I quickly hand over to Kevin now, because maybe we heard CBDC, it's a buzzword. So just for the ones of our listeners who don't know, it's the central bank digital currency abbreviation. So just quickly to jump in there, and maybe Kevin, share with us what your involvement there was, and how is it coming along, and what's going on now?
Sure, I'll be happy to. So Temasek's involvement in Ubin, frankly, it's very much on the phase 5 of Ubin, right? So for the folks who are new to this terminology itself, Project Ubin was something that was started by the Central Bank of Singapore, MES. It was really a study. It went through 5 phases, and Temasek was involved in the final 5th phase, where together with a number of the industry partners, we closed the study to really, I think, bring to a conclusion of what have been 5 phases worth of work in trying to understand the potential of currency on blockchain. What does that really entail? Which are the use cases? Which are the industries that could potentially benefit? And frankly, why do we care about it, right? So that in a nutshell was what Ubin is. Now, trying to talk a little bit more about CBDC and all this with blockchain, I think I just want to start on this basis. In this industry, there's a lot of buzzwords. There's a lot of terminologies which sounds really nice and sexy, but frankly, what do they really mean? I think this is something that folks who are new to industry should really take a pause, think hard, and try to understand those terminologies, break it down to simple layman terms, right? The terminology such as digital assets. And I've always told people, what does that mean? Today, the way we've been transacting and talking to people, right? If I were to buy a share, I can access it on my mobile phone, for example. And isn't that digital? What is digital assets? If I'm talking about currency, today, I can send a transfer to someone, to a friend, right? Using my PayNow account or mobile payments account. Isn't the whole process digital? I've literally had not touched any physical cash at all. So the understanding then has to go one step deeper into what is it exactly that we're trying to resolve here. And I just want to take this opportunity to explain kind of like what I generally think is a useful layman interpretation of the situation. So the first is, what is blockchain, right? So for those who are new to the term, I would just say it very simply: blockchain is just about a replicated database. It is just a database, multiple records of the same thing, so that participants on the network can then be able to get certainty that the records that we are viewing, right, is tamper-proof, and at the same time, there's certainty as to whom is owning what at this point in time. Now, if it's just a replicated database itself, what value does it really have? And I think it goes to the question of what, or the pointers that what Kunal was mentioning earlier. It could be a database of recording various types of possible assets, right? And that's useful. That's useful for what purpose? If anyone wants to actually view and see, hey, how much does Kevin have of this asset today, right? They would not need to call Kevin out and get the answer out of my mouth. They will have permission and the ability to view it themselves, right? So this is the first point. And what does that bring? If you then look at the existing industry that we have today, a lot of the transactions, especially the transactions within the financial services market itself, the huge number of intermediaries who are playing the role of the intermediary of trust. They are advising and they are working on the behalf of various end players in order to ensure that the transaction passes through, there's trust in the records, and there's trust in the settlement and finality of whichever it is that's happening, right? And if you then break it down further, what is a financial transaction? A financial transaction, if you stick it at the most basic layer, it's just about a transfer of an asset from party A to party B, and correspondingly, the representation of payment from party B to party A at the same time. So what, and why they take the trouble of trying to go down to some of these basic concepts? Because CBDC, or more generically, or what has been termed in the market, central bank or commercial bank digital currency, right? But I like to just use the broad word currency on chain, right? A payments network that's being built on the blockchain, what does it really help? And why is this something that Temasek holds quite dear to our heart and we think is integral for the development of this particular sector? Because as Kunal was explaining, we personally believe that there's a view going forward that there will be more and more of different types of assets being recorded on a distributed ledger. Okay, but that's just a record of the various assets. And I was trying to explain earlier, in order for you to facilitate a full financial transaction, you would need to likewise have the representation of the payment on the chain itself, right? So that any particular transaction, the completion of it can be actually cited and validated on a common replicated database. And there's been innovations in the space. We first started with cryptocurrencies, which frankly are a representation of monetary value, despite the fact that the value of it could actually skyrocket or tank in a single day. And then you've moved on to the world, in the public permissionless world, to what is something called stable coins. So tokens or representation of currency that's been issued by various projects backed by some level of promise of stability, maybe backed by collateral, maybe backed by the algorithms and something else, right? And I think where the world is really moving to is, at some point itself, I think it's actually useful. And in fact, I believe that it's fundamental and it's important for the industry that if we want the whole blockchain, or we want various industry players to really leverage off the potential of blockchain as a technology, we need to find a trustworthy manner of allowing for currency on the blockchain itself. And that's where traditional issuers of currencies, the likes of your central banks, or traditional players of the monetary system, the likes of a commercial bank, right, would be actually very useful in coming into the picture as intermediaries of the trust to allow for payments on the blockchain itself to really fulfill the full potential of enabling an end-to-end financial transaction on a common ledger. Yeah, so I hope that explains.
Thank you very much. I would then also like to give the word to Roland. I mean, you have a quite a good view as well here in Asia, but you're also back in Singapore, where you also have achieved significant milestones working together with various different stakeholders to actually achieve the first bankable settlement token, right? Maybe tell us a bit more, just from your experience, from yeah, exactly this trend that we were just now exploring.
Yeah, so actually our bank-backed settlement token is exactly also a stable coin. So we issued the first bank-backed stablecoin, which is 100% collateralized with the underlying currency, which is Swiss francs. And we can even deposit that Swiss francs to the Swiss National Bank as the Central Bank of Switzerland to keep it safe there. So it's a fully collateralized and bank-backed stablecoin, which currently we only use for internal settlements, but we are also in the process of expanding our radar and the ecosystem of users for using the stablecoin outside our own networks only. So we're currently speaking to a couple of potential partners where we might engage into solutions such as also cross-border settlement solutions using that particular stablecoin. And as Kevin has mentioned, so there's a couple of and pretty kind of assets under or asset-wise pretty scary stablecoins out there where there's no transparency to what extent they are collateralized, who are the issuing parties, etc. So there's a lot of counterparty risk for those who use and invest into the stablecoins, be it for the transfer of value or be it for any other purpose. So and then where the central banks of course come in, there is probably no better counterparty than a central bank for guaranteeing the value also of a stablecoin or digital asset or a central bank issued digital currency. So we have started that journey, and it's a very interesting one also, and it's a needed one also for the transfer of value. Also, as Kevin has pointed out, the delivery versus payment process of a financial transaction. So you have the trade agreement first, and this can happen through a handshake. The trade can happen online on a trading platform such as an exchange. But then you need to settle the trade. So delivery versus payment, you need to deliver one asset against the other. And this is exactly where, because we still, one of the assets we use in our daily lives, mostly use is fiat currencies. And digitizing fiat currencies and settling, using that for the settlement process against also digitized assets will definitely pay a huge contribution to the efficiency of global cross-border settlements, be it for fiat transactions or any kind of other asset transaction. So we are now really looking forward to build more use cases on that fundament of the stable bank guaranteed stablecoin we have issued. And the first use case, you might have seen that just 2 weeks ago, we went live with that, is that the Swiss Amazon, so the largest retail platform in Switzerland, is now also using our, we call it DCHF, so the digital Swiss franc stablecoin for payments. So people can really use our token for payments, and the advantage for the platform is for the online platform is that they immediately receive their cash for the transactions. But then it's a matter of minutes only, basically on a matter of the block generation of this transfer. So there's plenty of other use cases out there, and in particular in the area of cross-border settlements and cross-border payments, we see plenty of potential for that.
Thank you, and yeah, congrats to that milestone. I also read about it. So actually we stay with you, and also I will after share the poll, because it was actually in between the two buzzwords which we want to talk about. It was between digital assets and tokenization. Tokenization came in second, but anyways we have already so anyways this in storage for you, right? I mean, what I questioned before, like what is your most powerful industry use case which you want to talk about, and Roland chose actually tokenization. So maybe can you also address a bit the myths and where we stand today, and like what is already built in the value chain, what needs to be built, where do we face challenges, maybe some parts also around the regulation.
Yeah, let's maybe start with a short definition. What do we understand of tokenization? So when I used the word tokenization, I referred to the digitization of an asset. So basically, tokenizing a stock, a bond, a real estate structure, and tokenizing, put it into small pieces where it can be traded, and it can be also safely stored. So with all these advantages, what the technology can bring to us. So if we look at the tokenization of assets, and this is what I mean when I use the word tokenization. So companies like R3, for example, are the infrastructure providers, providing the technology that you can do that kind of things and providing that entire stack of servicing around it from a technological perspective. And then you have also banks like ourselves. We facilitate the financial structuring. So for example, last year we have issued the first digital stock in Switzerland, also on our joint venture platform Daura in Switzerland, which was the extension of a Swiss skiing resort, so an equity token. And also the second project was a Middle Eastern based property fund, which was then also issued, but it was also put into a equity structure first before it was tokenized. But inside it was property. So if you look at the entire value chain from the token generation, token issuance, the structuring part of the finance behind it, the settlement part, the custody part, the primary placement, and at the end you have the secondary market trading one day. And this is exactly where we are right now. Looking at the value chain, the last part of the chain, the secondary market platforms are not there yet. And there's a couple of platforms in the pipeline. Some of them have licenses already, but they're not live yet. So that means if you tokenize an asset and you want to trade it, you are more or less now restricted to OTC transactions, where you also need platforms. And by the way, we have just also received our approval from the Swiss regulator FINMA to launch our internal OTF, which is a Swiss regulatory format as a kind of exchange venue which you can run under a bank to exactly do that. So to do the trading of tokenized assets. But the real exchanges out there, like in traditional markets like SGX, like Deutsche Börse Group, like the London Stock Exchange, like New York Stock Exchange, they are not there yet. They are developing their markets, and I used to work for Deutsche Börse Group, so I was part of those developments some years ago. You see some more advanced projects like the Swiss Stock Exchange has come up with their own SDX, Swiss Digital Exchange. You see other traditional exchanges also moving a bit faster than others, but the markets are not there yet. And this is something what you need to always keep in mind. I'll give you one example. I had a lunch meeting last week, and by a investor who wants to tokenize, wants to raise capital through through debt and wants to tokenize that debt. And he was kind of disappointed after he spoke to a couple of participants in that industry that it's so expensive and it's so complicated. So I also reminded him that we're still at the start here. We're still at that time compared to when the first automotives hit the road, but the horse cars were still the dominating vehicles. At the beginning, the cars were slower. They produced more pollution. They were not built for those bumpy, dirty roads back then. But we also all know what has happened since then. It probably will happen much faster. But for the time being, the value chain is not complete. But you see also the completion happening very, very fast. And I'm sure that in the next couple of months, we will see the first platforms coming out. And then it's all about building the liquidity on these platforms. But it's coming. But it's just for the time being, it's not complete yet. So we need to be aware of that. So if you tokenize a project now, you might have to do it in a traditional way. Or you might and also have to do it in as a digital way in parallel, because also, for example, if you would like to tokenize a stock, I don't know of any stock registry or share registry in any country which is already completely digital or can at least facilitate the digitization on the first step as a registry. Registration of a share. So this value chain is about being completed, and companies like R3 are definitely helping here, as also some others. Now we see even some protocols coming from the so-called public space, now entering the more, I wouldn't say private space, but let's say adding permission control functionalities, which allow also the usage for regulated financial institutions. So we see that also happening, and it's very exciting to be part of that entire process and contributing to this tokenization of assets.
Nice, thank you for this answer. I mean, I'm conscious of the time. We have another 10 minutes left, and we have questions by the audience. So let me just jump to the questions. And the first one I would like to address is, what would be the one key takeaway from the findings from Project Ubin, and how will it impact financial services in Singapore specifically? So maybe Kevin, am I allowed to drop this question with you?
Yeah, no problem, no problem. I think the one key thing that we realize is this, right? You need to find a way to commercialize it. There's been a lot of talk, a lot of work across different countries and jurisdictions as to what CBDC actually looks like and could potentially be like. We need to see how it works, how it is like, right? And economic trade-off of participants who are actually engaging on it. So that, frankly, is the immediate next step that we have to go to. What does this mean for the financial industry in Singapore itself? I believe that it's going to still be in a phase of experimentation. I believe, right, and then don't quote me on this, but I do believe that there's going to be a phase whereby the existing real-time gross settlement payment system in Singapore, for example, will not go away. It will still be here. There's so many trades which are transacted on it, but there will be pockets of activity that people will start to experiment in a live manner on the new payment rails. And I think there's actually enough room and enough scale for both to actually exist in coexistence. So it's not a case about one payment system overtaking the other in totality. Yeah.
Thank you for this. Then I also received another question. Bringing this level of trust into financial transaction, does it mean that until now there was a common fraud in them? What percentage or type of transaction would you estimate to be fraudulent? Does anyone want to take this question and maybe, or maybe like answer it on a bit or broader level? I mean,
I'm happy to jump in a few comments, and I'll pass it to the rest as well. I don't think, frankly, so first of all, the question is a very broad question. I just want to highlight a few cases. Depending on the use case, and there's multiple use cases within the financial services industry, but the levels of fraud in each of these use cases actually differ. However, even a relatively matured financial services industry with good level of governance, frankly, the level of fraud within the industry is kept to a very minimal level. And you ask people then why? Because the level of trust that's been built on is being built on a number of seasoned big financial industry players that are in turn being regulated by the likes of the MAS in Singapore or the equivalent of other banking regulators overseas. And the penalty that's involved if fraudulent actions were found out is very, very severe, right? But the key point I want to just leave it over here itself is this is the system that we have gotten used to, and it actually works very well in well-governed in developed nations. It may not work so well in certain jurisdictions or countries whereby the overall ecosystem is not as mature or the overall level of governance is not of that degree, right? But the question I really just want to leave with the audience is, why does this have to be the status quo? We got used to this because it was how things have evolved to be. This doesn't necessarily mean this has to be the future of transactions itself.
Then I go with the next question. It was actually to our three. It was addressed a bit earlier, and it was during the session actually when you were talking about the central banks and the projects you have been involved with. And the question was then, how will they actually use cryptocurrency?
Thank you for the question. I'm assuming you're asking how R3 would use cryptocurrencies. I guess maybe to answer that question, we don't use any form of cryptocurrency. So R3 is really a technology platform. So we have a technology platform, a DLT blockchain platform called Corda, which is used in different industries for different purposes. Where we do work with maybe exchanges would be under sort of the digital asset exchange kind of umbrellas. So as Roland mentioned earlier, the likes of SDX, even NASDAQ more recently, these kind of traditional or kind of technology exchanges, you want to basically use blockchain to kind of host assets is where Corda or, for example, a blockchain technology would play a part. But we don't actively trade or host any kind of cryptocurrencies.
Kunal, I think you misinterpreted the question. I think they were asking how much cryptocurrencies you personally hold and whether you're willing to distribute to the rest of participants.
And if you can give some investment advice. No, he's not.
There's not enough time for that.
Exactly. Maybe we get one last question, and it's a question. Maybe it goes to decentralized finance, and I would say it goes to Roland. What's your opinion on the current DeFi hype?
Well, it's very, very interesting. At the beginning, to be honest, I did not take it really serious. About 1.5 years ago, when the first people approached me and telling me they are doing DeFi, and I figured out after a minute that they have no clue what the Fi means of the DeFi. So I didn't take it really serious. But then what happened since April this year, when the so-called DeFi locked up value on those typical platforms was around 400 million, which is already significant, but it topped almost 10 billion 2 weeks ago. And this is then really kind of scary. So a while ago, I started looking into it and also started experimenting a bit with all the fancy platforms out there. And it's really interesting from a perspective that, there is stuff out there happening, what we know from traditional financial markets, such as lending and borrowing arbitrage. That happens on DeFi, but it's completely automized and it's also completely decentralized because it's done by smart contracts. But there's other very interesting aspects, what has never, like for example, when it comes to market making, and I was, let's say, working for an exchange in my previous life, everything is about liquidity. And the liquidity provision, the first guys you have, whenever you launch your product, is the market makers provide liquidity, but they take a lot of risks, so they need to get incentivized. So now this DeFi space also offers something like AMM, which stands for automated market making, where everyone holding that asset can provide liquidity, taking the risk, and gets also then yield on that risk. And this has kind of now become, let's say, it went a bit out of control when there was 2 or 3 weeks ago, the first platforms launched issuing their own tokens and incentivizing market making liquidity provision with, let's say, APYs, so any percentage yields of 40, 50,000 plus, and minting their own tokens and throwing it on the market. So it kind of, and now you see these platforms being launched every day, new platforms, be it burger platforms, they call themselves Burger Swap or Sushi Swap and Sake Swap and whatever kind of fancy food names, and Pumpkin and so on. So there's a lot of stuff happening, but to be honest, there's also a lot of interesting stuff happening, but you need to see how can you turn this into serious and stable financial products also. And this is exactly what we're also looking into. We have a couple of colleagues, team looking into that as well. There's definitely some very, very interesting potential out there when it comes to, in particular, liquidity provision, but also staking. And staking is something that has never been there before. This is completely new, but this is something also for the next session. And I would not start talking about this now, but everyone who's interested should just look up what staking means. It goes back to blockchain consensus algorithms and what you can do with that. It's highly interesting, definitely. So it needs to be taken serious, and we need to look into how can we really bring this also to how can we turn this into reliable, sound, and regulated financial products and services.
Thank you. It is definitely interesting times, and it keeps on amazing me with new things that come across in this ecosystem. So I want to thank you so much for taking the time to talk to us today. And I really believe there needs to be a second session on all the next buzzwords we now threw out, right? Kevin will already be happy to get down to this definition sentence again. No, I really want to thank you very much. I also just want to comment on the last question we had, that someone also asked us on if we can give any recommendation on books, reading, on blockchain applications, not just finance, can also be other industry and government. I just want to mention at this stage, I will collect it from our panelists and then share it via email. And yeah, and with this, I close this webinar, and thank you so much for taking the time. And yeah, hopefully we can do this another round. Thank you very much.
Thank you very much. Thank you. Great, everyone. Thank you. Bye-bye.
Bye-bye.
Bye.